Hey everyone, welcome back to Corporate Decode here, the place where we unpack the financial wizardry behind the companies you know and love. Today we're diving into Sunation Energy's latest quarterly report. And let me tell you, it's a real nail biter, especially with those surprise reverse stock splits. Sunation Energy is a company focused on solar power and battery storage, and their recent filings show some interesting shifts in their financial landscape. Let's see what the numbers are telling us. We'll start by taking a quick look at the big picture, the balance sheet. This gives us a snapshot of what the company owns and owes. Sunation Energy's total assets at the end of June 2025 were about $44 million. That's a bit lower than the almost $46 million they had at the end of December 2024. It seems like their total assets have slightly decreased over the first half of the year. Now let's check out what's happening on the other side of the balance sheet, the liabilities and equity. This tells us how the company is funded. Their current liabilities, which are what they owe in the short term, were about $12.8 million at June 30, 2025. That's a big drop from almost $27.2 million at the end of December 2024. This significant decrease in short-term debts is mainly due to paying off a lot of their loans, which is a good sign for managing short-term obligations. Looking down further at their equity section, we can see how much is owned by shareholders. Their total stockholders' equity ended up being about $22.1 million at June 30, 2025. This is a pretty substantial jump from around $8.5 million at the end of December 2024. This increase is largely thanks to raising a lot of new money through stock sales and warrant exercises, which really boosted their equity position. Now let's move on to how the company actually performed over the 3 and 6 month periods, looking at their income statement. Let's talk about sales first. For the 3 months ending in June 2025, sales were about $13.1 million. That's a small decrease from about $13.5 million in the same period last year. Over the first 6 months of the year, sales also decreased slightly to $25.7 million in the first half of 2024. It looks like sales are just slightly down overall, which could be due to market demand or company-specific issues. All staffed out there, gross profit to make those sales are just slightly down overall, which could be due to market demand or company-specific issues. Coin, but how much did it cost them to make those sales? Let's look at their gross profit. Gross profit, which is what's left after taking out the direct costs of making their products, actually went up a little. For the 3 months ending June 2025, it was about $4.8 million, up from roughly $4.7 million in the same period of 2024. This marks an almost 1% increase. Gross margin, which is gross profit as a percentage of sales, improved to 37% from 35%. This means they are keeping more money for every dollar of sales, possibly due to better management of material costs or increased prices. Now, for the really big picture items, the operating expenses and other income or expenses, these can really swing the net income number. Here's something that really stands out, and it's a big one. The fair value remeasurement of warrant liability caused a loss of about $7.5 million in the second quarter of 2025. This is way bigger than the loss of about $3.3 million in the same quarter last year. This means the value of their outstanding warrants, which are contracts to buy stock in the future, changed a lot, and it hurt their bottom line. This also happened for the 6 month period, where the loss was about $7.5 million compared to a gain of about $46,000 last year. These changes in warrant values are often tied to stock price fluctuations and can be quite volatile. After all of that, let's see what their final net loss looks like. For the 3 months ending June 2025, Sunation Energy reported a net loss of about $9.6 million. That's a bigger loss than the $6.9 million loss in the same period of 2024. On a per share basis, this loss worked out to be about 3.14 per share, a big jump from the $11,000 per share of 2024. Our per share basis, this loss worked out to be about $3.21 million for 2025, which is also worth stock splits we mentioned earlier. Over the 6 month period, the net loss was about $13 million for 2025, which is also worse than the $5.7 million loss in the first half of 2024. It's important to see how these numbers compare to their core business operations, so let's look at their segments. The Sunation segment, which covers their New York and Florida operations, saw its sales stay pretty steady, increasing just a bit to $9.8 million in the second quarter of 2025 compared to $9.7 million in the same period last year. Their gross profit improved by 7% and their gross margin went up to 40.3% from 38.2%. This is good news for their core solar installation business in those areas. IT now, let's check out Hawaii Energy Connection, or HEC. However, AEC sales took a hit, dropping 15% to $3.2 million in the second quarter of 2025 compared to $3.8 million in the 2024 period. This was mainly due to the ending of a battery bonus program in Hawaii, which likely slowed down demand for their services there. Their gross margin also slightly decreased. So what does all this tell us about Sunation Energy? Well, the core Sunation business seems to be holding steady with some margin improvements, which is positive. But the significant losses from warrant revaluations and the decline in HEC sales are definite concerns. The company is also dealing with a lot of debt restructuring and capital raises, as seen in the balance sheet and cash flow statements, which indicates they are actively working to improve their financial footing. Looking at cash flow, they used about $3.5 million for operating activities in the first 6 months of 2025, which is more than the $3.4 million they used in the same period last year. This suggests their core operations are still burning through cash. However, they did bring in a lot of cash from financing activities, about $5.9 million in the first half of 2025. This came from selling stock and warrants, which helped them pay down some significant loans. A major point of concern, clearly stated in the filing, is their ability to continue as a going concern. The company explicitly states that there is substantial doubt about their ability to continue as a going concern. This means they might have trouble covering their expenses and debts in the near future if they can't secure more funding. They are relying on raising more capital through stock or debt, but there's no guarantee they will be successful. This is a critical warning sign for investors and anyone looking at the company's future. Then we have those risk factors, and there are a lot of them. One notable risk is their listing on the Nasdaq capital market. They've had trouble meeting the minimum bid price requirement for their stock in the past, and while they seem to have resolved that issue for now, it highlights the volatility and potential risks associated with their stock. Another big risk is the changing regulatory landscape. The recent passage of the One Big Beautiful Bill Act in July 2025, which affects tax credits and incentives, could really impact demand for solar energy systems. This makes their future revenue streams less predictable. Now, based on this filing, Sunation Energy is in a tough spot, but also showing some signs of strategic maneuvering. Their core Sunation business is stabilizing, but the overall net losses and the significant uncertainty around future funding are major red flags. The company's ability to manage its debt and secure new capital will be absolutely critical for its survival and future growth. It's a high-risk, high-reward situation right now. Alright, that's our breakdown of Sunation Energy's latest report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, smashing that like button really helps us out, and subscribe for more deep dives into corporate finances. Don't forget to join our Discord community linked in the description below for more real-time discussions and insights. Thanks for watching. See you next time.